At the 12th Angel Fair Africa, the future of innovation took center stage. 6 industry-defining startups pitched bold ideas, reshaping sectors, solving real challenges, and pushing boundaries. From fintech to health tech, these ventures weren't just pitching. They were building Africa's tomorrow. The event marked a true milestone in shaping the continent's startup ecosystem, where investors meet visionaries and ideas turn into impact. This is the pitch from Ted Koka from TradeX Capital. TradeX Capital is the best trading platform where you can invest and gain a profit quickly.
So last year, my business partner and I spent over $1 million funding purchase order transactions in Southern Africa. Those countries included South Africa, Zambia, and Zimbabwe. What we quickly learned is that this market is excessively problematic. Everyone operates in silos. There isn't a systematic approach to how purchase order and invoice discounting is done. And so out of that, Trade and Capital was born. On the one end, entrepreneurs have serious constraints. The first thing is that they have funding gaps, right? And when you get a purchase order and you cannot fund the purchase order, your fulfillment is affected. The second challenge entrepreneurs have is the high cost of capital. The third challenge that entrepreneurs have is the slow access to that capital. And the fourth is something we found to be problematic from an entrepreneur's perspective, which is the governance to pay the funds back after it's been obtained. On the investor side, there's an efficiency problem. The investor needs to quickly verify purchase orders. That's the first challenge. The second challenge is that they need to have access to rapid KYC across the company, the individual, the taxes, the banking, etc., etc. And once they finally get to a point where they deploy the funds to the entrepreneur, their analysts have taken a lot of time, but their biggest and their next biggest problem is collections, right? So getting your money back is equally problematic. And so we are building a unified ecosystem for purchase order finance and invoice discounting. The way it works is quite simple. This is a marketplace approach. Every entrepreneur or capital allocator registers once with a single sort of verification done per year. Entrepreneurs can then upload as many purchase orders as they can, which capital allocators can then invest in. They can either invest in a portion of the purchase order or finance it entirely. The process of collection is something that we then manage through APIs and automation, etc. On the date on which the payment is due, the payment comes to us, we pay the entrepreneurs, and then we pay out the investors as well. From a traction point of view, we are an FSP. It's a really important piece of legislation to have in South Africa, which means we can deliver on long-term, short-term insurance, as well as do lending in a credible way. Because we've been working on the platform for a bit, we are 60% there. By the end of April, that platform will be ready. We've developed a pipeline in excess of $10 million just by reaching out to people without any marketing. And so the need for this is quite extreme. How much are we raising? We are raising R1 billion. From a dollar point of view, this is about $55 million. The funding generally doesn't come from a VC. In this instant, it comes from the likes of the Industrial Development Corporation and all of these capital allocators who will place the funds on our platform. Okay, I think that's the long and short of it, and I'm open to all your questions. Thank you very much. I'm sorry, I forgot to tell you how we make money. We make money in critical ways. The first is a transaction success fee, which ranges from 2 to 2.5%. The second is the interest we make on all the money we lend out. The reason we're raising so much money is that we have to forcefully change the behavior in the market, right? So most of these purchase order guys just have a really outlaw approach. Some people charge really high interests. Others take 50% of the entrepreneur's profit, and all of that is done to mitigate their costs. And so those are the two revenue lines. And then the third is what we call premium services, right? So when a capital allocator has time-consuming analyst, we've turned that into an AI process, right? So the analysis happens immediately, et cetera, et cetera. So yes, that is it.